I'm attorney Michael Tyler, bringing you guests and information to help you get legal. Hello, and welcome to another installment of Get Legal. I am your host, attorney Michael Tyler. Before we get into today's subject matter, I would first like to apologize to all of my viewers. I did not present a new episode in December. Unfortunately, my schedule got quite hectic. Just to put it into context, I was putting in a full days of work on New Year's Eve. That just lets you know what my month of December was like. So I do apologize for not presenting new content. However, I hope today's content, which will be on income taxes, will be sufficient enough to make up for my missed episode in December. Before I get into presenting my wonderful guest today, I would like to say that if you out there who are watching have particular topics in mind that you would like to see, because of course I always have topics that I go over with my group in order to try to bring you guys something new, fresh, but educational on a monthly basis. But if there's something that you would like to see, please feel free to either give me a call and let me know what topics or speakers that you would like to see as guests on this show. You can call me directly, or if you want to, you can also call up here to WLFT and then let them know what you would like to see or who you would like to see. And I will put this challenge out there. Let's say you call up the WLFT to let them know what topics you would like to see. If 100 people call, what I would do is, for the 10th person that calls, I will give you a gift card. For the 25th person that calls, I will give you a gift card. For the 50th person that calls, I will also give you a gift card. And for the 100th person that calls, I will give you a gift card. So please, let me know what topics that you would like to see, and I will work very diligently to secure those topics, secure those guests, and bring them to you on a monthly basis as we proceed forward in this year. So enough of that. Let's go ahead and get into our topic today. Joining me to present this topic on income taxes is Miss Lakeisha Pruitt of the Pruitt Group. How are you doing, Lakeisha?
I'm doing great.
Okay, so we're here to discuss income taxes. And for all of the people out there, I want them to know that you are a tax preparer here locally in Baton Rouge.
Yes, that's correct. I'm located 2435 Drusilla Lane here in Baton Rouge, Louisiana.
Okay. Now, from the standpoint of your status as a tax preparer, do you have a professional title of some sort?
Yes, I am an enrolled agent.
And what is an enrolled agent?
An enrolled agent, is a tax advisor that's pretty much a federally licensed tax practitioner, and we're governed by the Department of Treasury.
Okay. And for those that don't know, the Department of Treasury is actually the agency that oversees the Internal Revenue Service. With that being said, how does one become an enrolled agent?
First, you have to have a preparer tax identification number,
Okay.
and then you have to take 3 tests. Some people can also get it if they were an employee of the IRS for 5 consecutive years, but you have to be in a position where you're dealing with taxpayer matters.
Okay. Now, from the standpoint of you, how long have you been preparing taxes?
I have been preparing taxes for over 10 years now.
And what do? Do you do individual income taxes? Do you do business taxes? What
I
do you
do individual and business tax returns.
Oh, wow. That's what's up.
Yes.
Okay. So now, let me ask you from the standpoint of being a tax preparer. One thing I tell people all the time as an attorney is it seems like here in the Baton Rouge area, you can throw a rock and hit about 2 attorneys with the throwing of that rock. We just have so many in this area.
Yes.
What is your take on how a person should go about choosing a tax preparer?
Okay. Choosing a tax professional is very important. The reason being is this is very sensitive information. The person who is preparing your taxes have access to your social security numbers, your W-2s, your children's social security number. So making sure that you have someone who is trustworthy, someone who is reputable, and someone who is competent is very important. You want to interview your tax professional. You want to make sure that they're taking those continuing education courses, because as we know, tax laws are always changing. The deductions are changing, credits are changing, and you want someone who is competent and who is really going to get you all of the credits and deductions that you deserve.
Okay. That's something similar that I do. Whenever I sit down with a client, usually my clients come by way of referral. So whenever I sit down with them, not only do I discuss with them their case or potential case, but then I also take some time out to explain to them who I am, how long I've been practicing, how long I've been doing what they've come to me for, and what my success rate has been with that. So it's an interview that I force myself to go through, even though they've been sent to me. But I think it's very important that they know who they're dealing with and that the person that they're dealing with knows what they're doing. Do you agree?
I totally agree. I totally agree. And another important thing is make sure your tax professional doesn't disappear after April 15th.
Now that's very important because we do have individuals who prepare taxes, but they're seasonal, quote, seasonal, meaning they only operate from a tax standpoint for the period of time, we can say from December of the ending year through April of the reporting season. And then
Correct.
after that, they're nowhere to be found.
Right.
What about yourself?
I'm year-round.
Okay.
I'm here year-round throughout the tax season, January through December. You can find me.
Okay.
And, you know, they do have some seasonal tax professionals that are very good.
Right.
It just depends on what the taxpayer is looking for. If they're looking for someone who they can get in touch with and who can do other tax matters for them, tax planning, tax estimates. So all of that matters, you know. So I don't want to say anything is wrong with the seasonal tax professionals because there are some great ones out there.
Absolutely. But at the same time, I think a contingency needs to be made for those situations where you filed your taxes, you may have received your refund in at least by the month of April, but then in October you get that nice letter from the Internal Revenue Service.
Right.
And so you definitely want to have a situation where if you do get that letter after tax reporting season, that you can not only contact, but you can put hands on
Absolutely.
the person who prepared your taxes. So I believe that's what we're saying.
Yes, absolutely.
Absolutely. So right now we're at the beginning stages of the 2018 reporting season. But with that being said, and the reason why I wanted to make sure that we brought this particular show to light is the fact that in 2017, Congress passed laws that drastically, across the board, affected how we are going to be taxed and how we are going to report. Do you want to give any information on that?
Where do I start? But yes, you are correct. There have been tons of changes. First change being is the 1040. That has changed. So the look of your tax return will be different starting this tax season. It used to be, I think, 79 lines on the Form 1040. Now I think it's down to about 23 lines. Oh, wow. But they've added about 6 schedules to work with. They've did away with the 1040A, the 1040EZ. So they pretty much wanted to simplify it. So that's why your actual tax return will also look different as well. Some more changes that arise has been the child tax credit. The child tax credit used to be about $1,000 per child under the age of 17. They've actually doubled that to $2,000 per child, oh, wow. Which is, I mean, really good. Yes. And also more taxpayers will be qualified for that credit, being that they've also raised the income limits as well. Last year, it started to phase out at $75,000. This year, it's $200,000 for single filers. Also last year, it was $110,000 for married filing jointly taxpayers. Now it's $400,000. So that's a big group of taxpayers who's now going to qualify for that credit. Also, the additional child tax credit, that was $1,000 last year. It is now increased to $1,400 this year. So there's a lot of increases for the credits across the board. Another important thing is the standard deduction. The standard deduction has increased as well. For single taxpayers, that deduction is now going to be $12,000. For head of household, $18,000, and for married filing jointly is $24,000. Okay. But they did do away with the personal exemption. So this year there will be no personal exemption, but they did increase the standard deduction for taxpayers.
Okay. Now, even with the increase with the standard deduction, as well as the taking away of the exemption, is the increase with the standard deduction enough to balance out the loss of the exemption, or will there still be a loss of a little bit of money within that exchange?
I think so, because of the increase in the credits. And it just really depends on the household size, the filing status. I've did quite a few examples, and a few people, it may mess up just a little bit, but not much, being that the credits has most definitely increased.
Okay.
And the tax rates have decreased as well.
Okay. But now, even with that, once we look at how this reporting season is going to go, do you foresee any instances where, let's say, an individual who had a W-2 wage, and let's say the wage changed from 2017 to 2018, is it a possibility that when they report, they might see less of a refund in this reporting season than last year's reporting season?
I would say it kind of depends. The reason why is, from a taxpayer's standpoint, they may not see it, being that the beginning of this year, remember when people had an increase in their checks. So once they change those tax rates, it kind of, it may balance it out just a little bit.
Okay.
But just from a taxpayer looking at it, they may not see huge changes, but from a tax professional, you will be able to see that it did really save some, taxpayers some money this year.
Okay. Well, I know just from the research that I did on this tax reporting season coming up that people might have a situation where their eyes are opened a little bit more to actually what was passed by Congress. We'll get further into that when you come back and rejoin us after this break. Welcome back. So once again, we are joined by Ms. Lakeisha Pruitt, and she is discussing with us what to anticipate and expect with respect to this year's income tax filing season. With that, before we were talking about, of course, filing, different credit changes, the law changes, so on and so forth. Breaking it down to basics, are there particular statuses that a person must elect or check the box on whenever they're preparing their tax returns to be filed?
Okay.
Like, do I have to classify myself? I'm divorced. What would I classify myself as?
Okay, well, that all depends. The filing statuses are single, which is a single individual with no qualifying dependent or no qualifying relative. Then you have head of household. That is pretty much a taxpayer who is unmarried by the end of the tax year on the last day, and they are providing support to they're keeping up with the support of a home with a qualifying relative. Then you have married filing jointly, which is two individuals who are married. They can file together. Then you have married filing separately, and those are individuals who are married who do not want to file together.
Okay.
And then you also have the qualifying widower. That's if your spouse unfortunately dies.
Okay.
Then if you have a qualifying dependent, you get to use that status for the next 2 years.
Okay. Two things that you mentioned there that I want to just touch on real quick. The first one is you mentioned a term where legally we would say it's a term of art because it is defined, and that's the term dependent. How is one classified as a dependent?
You have to meet certain tests. In order to be a qualifying dependent, you have to meet the support test. Are you taking care of over half the costs for this child? You also have to meet the residency test. Is this child living in the same residence as you? You also have to meet the age test. Is this child under the age of 19? If they're over the age of 19, are they in college? And the next test is the relationship test. Are they your son, your daughter, your stepchild, your foster child, or did you adopt them to be classified as a qualifying dependent?
Okay. Now, let me ask you this. In some instances, we have situations where an adult will come and live with the younger individuals. And with that, that adult is not employed. They might have some health issues, which causes them to not be able to work. But they're staying with you, and under your household, you're pretty much paying all the bills at the house, and you're providing food and such and such. Is there a way that that individual who is living with you can potentially be classified as your dependent for reporting?
They'll be classified as a qualifying relative.
Okay.
So not a qualifying child, but a qualifying relative.
Okay. Now, another thing that you mentioned previously, we were talking about marital status with respect to filing. And let's say it's December 31st of 2017, and let's say sometime within the year of 2017, a client of mine filed for divorce, but divorce has not been granted as of December 31st. What should they look forward to doing with respect to their filing status?
In order to file dealing with divorce, you have to, is it a legal separation?
Okay.
So if it's a legal separation and they lived apart for more than 6 months or more than half of the year, and if they have a qualifying dependent, then the spouse could claim head of household.
Okay.
And if there's, but once again, you still have to meet the qualifying dependent status in order to do that. Because don't forget, you can only claim head of household if you're keeping up with the cost of a home and have a qualifying dependent or qualifying relative. So if you have two people who are legally separated and they lived apart from each other, they could the single status or file married filing separately.
Okay. Interesting. Well, I know from the brief period of time that I did tax preparations, one thing that I saw was a lot of people were very dependent upon what's called the earned income credit. Can you just give us a little insight in general on the earned income credit, and then from there, try to explain to the viewers whether or not the earned income credit will be affected in any way with the new tax law changes?
Okay. The earned income tax credit is a refundable credit for low to moderate income individuals and couples. So pretty much it phases out depending on how much you make. It can be different. The credit is different depending on if you have one child, 2 children, or 3 or more children. And some individuals also qualify, or couples qualify, for the earned income credit if they have no children at all. I think this year for taxpayers with one child, the maximum credit amount is going to be a little bit over $3,400.
Okay.
That's the maximum credit. There are phase outs. For 2 children, I think it's over $5,700. For 3 or more children, that credit is going to be over $6,400.
Okay.
And for individuals with no children, it's $529. Normally, taxpayers who receive the earned income tax credit, they get a delay in their tax refund. This year, they said they're not going to start issuing those refunds until February 15th.
Okay.
Now, I'm not sure if that information was said before the government shut down, but from the Master Tax Guide that I've been reading, it said they won't start issuing those refunds until February 15th.
Okay. Now, you just mentioned the government shutdown, and at the time of the airing of this episode, we will be neck deep into a government shutdown that has been brought by the executive branch of government with respect to the reasons why they brought the government shutdown. I won't get into that. But what is important for the purposes of this particular segment is how is this shutdown potentially going to affect not just reporting, but also refunds?
Okay. Well, as of Monday, the IRS commissioner confirmed that they would start accepting tax returns on January 28, 2019. They also said that people are going to receive their refunds as scheduled.
Okay.
Normally, when there is a government shutdown, no refunds. You don't receive a refund.
Correct.
But this year, they've confirmed that there will be no changes, that you will receive a refund, and they will start accepting on January 28th. As of right now, the IRS is operating at 12.5% of their workforce, but they are saying that they're going to bring on more IRS workers to be able to handle tax season.
Okay. Now, if you can, for me, let's transition a little bit because personal income tax reporting, in my opinion, is different when it comes to, of course, business income tax reporting. Is there any type of business tax information that you can give insight on, like for those individuals who are out here watching that might own or operate a business? Is there any insight that you can give to them from the standpoint of what they should be doing today with regard to compiling their documents in order to bring it to a person such as yourself to complete their tax reporting forms?
Okay. As far as business tax, people who own businesses, the first thing is, getting your bank statements, getting your documents. Do you have an income statement or do you have a balance sheet? Right. If those taxpayers don't have an income statement or a balance sheet, then it's like gathering up those bank statements from January to December, gathering up, cash receipts, right, gathering up invoices. Right. So all of that income and those expenses could be accounted for.
Okay.
Yeah.
Okay. Let me ask you this. I know for a period of time when I was doing taxes, I had a gentleman approach me. He did advise me that he was 2 years behind on filing. Actually, he and his wife were 2 years behind on filing. And he wanted to know if I could help him out with that. And of course, I said I could. Bring me your materials. And he politely, the following day, brought me a nice box of materials that were not pre-labeled, were not pre-sorted, and were not laid out in any form or fashion to where I can just get into the process of preparing. So I had to go through the painstaking process of reconstructing all of his financials before I could even get to reporting. Have you ran into instances such as that?
Oh, absolutely. I run into that all the time.
And how do you handle that?
I pretty much just, me and the taxpayer sit down, we put a plan of action together. I pretty much ask him what's his budget on getting this information filed and processed. Once we get the budget together, if it's something that he can afford, well, I need to do everything, then I get started right away. If not, I give him a plan of action on what he needs to do in order to get the information to me, under the budget that he's wanting to pay in order for me to process the returns for him.
Okay. Now, I saw in the change with the tax laws that are coming about that certain expenses that employees, wherein they used to come out of their pocket to pay for certain items or processes as a natural part of their work function, they're not going to be able to get that reimbursed for the most part moving forward. Are we still able to get tax prep fees written off on our taxes under the new tax change?
Unfortunately, no.
Really?
No tax prep fees. Anything that's dealing with, now your employer most definitely can reimburse you for
Correct.
those expenses, but we used to file in 2017 Form 2106, where if we had any work-related expenses that were not reimbursed, we were able to claim them as an itemized deduction. Unfortunately, this year, they did away with that.
Okay.
So as far as, if you drive to work and you're going to different job sites, or if you're picking up clients and taking them to different places as an employee, unfortunately, you can't file that deduction anymore. And the same with some people employees who work from home, where they can claim a percentage of, the home office and different things of that nature. Unfortunately, they did away with that.
Okay.
So majority of all the unreimbursed employee deductions are pretty much, they did away with it for this year.
Well, Ms. Pruitt, I thank you very much, and I wish you
Thanks for having me.
I wish you a very successful tax season. And for those out there watching, I thank you for tuning in. Hopefully, I will see you again next month. And once again, if you have any ideas on topics or speakers that you would like to see on this show, please call in and let us know, and we will work diligently to secure that for you. Thank you very much.